everyone. Okay, so thank you for attending this earnings call organized by AB Capital. If you have been reading our research material, you know that this company is one of our top picks for post-pandemic recovery. 15 out of 15 analysts on Bloomberg rate it as a buy with an average return potential estimate of 30%. So today we're very excited to have with us our friends from Robinsons Retail Holdings. And with us today to present the earnings for 2021 is Ms. Gina R, Dipaling, the Vice President for Corporate Planning and Investor Relations Officer of RRHI. We will also be joined by Mr. Stanley Co, Managing Director of Supermarket Segment, Christine Tueres, Group General Manager of the Drugstore Segment, and Edna Belleza, General Manager of GoRobinsons. We would also like to acknowledge the other members of the Corporate Planning and Investor Relations team, Mary Rose Leitan, also joining us via Zoom, Eric Crisologo, and Leia Artus for making this earnings call possible. So without further ado, I will be turning over the virtual floor to Ms. Gina R Dipaling.
Thank you, Ian. Good afternoon, everybody. The agenda for this afternoon's call is first we will discuss on the performance highlights, second omni-channel presence of RRHI, and then the consolidated results for 2021, and then business segments results and the recent developments. Let me summarize RRHI's consolidated results for the full year 2021. Consolidated net sales grew by 1.5% year-on-year to 153.3 billion pesos, and then blended same-store sales growth of negative 4.9%. E-commerce sales grew 3.5x year-on-year, accounting for 3.6% of total sales. 120 bips lift in gross profit margin to 23%. 10 bips EBITDA margin expansion to 8.5%. Net income attributable to equity holders of the parent company increased by 39.2% year-on-year to 4.5 billion pesos and 14.3% higher than the 3.9 billion in 2019. Store portfolio of 2,208 stores and 2,030 PGP franchise branches nationwide. The performance highlights for the last quarter of 2021 is as follows. Consolidated net sales grew by 7% to 44.4 billion pesos. Blended same-store sales growth of 2.3%, positive 2.3%. E-commerce sales grew by 2.9x year-on-year, accounting for 3.9% of sales. 90 basis points lift in gross profit margin to 23.3%. 100 bps EBITDA margin expansion to 9.2%. Net income attributable to equity holders of the parent company doubled to 1.8 billion pesos. Robinsons Retail opened 135 new stores by the end of 2021, but closed a number of underperforming stores, especially in the CVS, and completed the closures of the remaining global fast fashion stores. Total store network stood at 2,208 stores plus 2,030 franchise stores of PGP. Our stores serve as a fulfillment centers for GoRobinsons, our e-commerce site, which is the main online hub for our formats. GoRobinsons currently serves a total of 11 banners. RRHI posted net sales growth of 7% to 44.4 billion in fourth quarter, driven by increased spending during the holiday season, helped by the easing of restrictions to alert level 2 in the NCR in November. Rose Pharmacy contributed 2.2 billion pesos of sales in fourth quarter versus 1.2 billion for only 2 months in 2020. Consolidated net sales for the whole year of 2021 reached 153.3 billion pesos, up 1.5%. Supermarket and drugstores accounted for 3/4 of the consolidated net sales of RRHI. E-commerce sales grew 3x, accounting for 3.6% of total sales, surpassing the 2 to 3% target. We aim to achieve mid-single-digit e-commerce sales contribution for 2022. Same-store sales growth showed a continued quarter-on-quarter improvement from -16% in first quarter to +2.3% in fourth quarter. Drugstore, department store, CVS, and specialty segments delivered strong performances, with department store and specialty store segments registering double-digit SSSG for fourth quarter. Full year SSSG was at -4.9%. Gross margin expanded by 90 basis points to 23.3% in fourth quarter and 120 basis points to 23% for the full year, from the higher vendor supports and better product mix almost across all segments. EBITDA margins likewise improved by 100 basis points to 9.2% in fourth quarter, given positive SSSG supported by higher cost controls. Full year EBITDA margins increased by 10 basis points to 8.5%. Net income attributable to parent more than doubled to 1.8 billion for fourth quarter and ended 2021 with 39.2% improvement to 4.5 billion. Bottom line expansion is due to better operating performance. Forex gains increased earnings from associates and lower income tax rates due to Create. EPS expanded higher due to share buybacks at 121.5% uplift in fourth quarter and 42.4% increase for full year 2021. I will now turn you over to Stanley.
Hi, good afternoon. The supermarket segment, including no brand and grocery, registered net sales of 24.7 billion, bringing full year net sales to 88.6 billion. Same-store sales growth for the quarter was at -1.2%, an improvement from a -3.7% the previous quarter. Full year SSSG was at -8.7%, given the heavy pantry loading in 2020 when the lockdown started in mid-March, aggressive expansion of both online and offline competitors, and ongoing renovations in key Shopwise and the marketplace stores. Meanwhile, e-commerce tripled in 2021, accounting for 3.7% of sales, above the 2.4% target. We aim to expand our e-commerce business with a sales contribution of 5.7% of sales for this year. Gross margin was at 22.1% in 4Q and 21.5% in 2021. Excluding the consolidation of grocery and no brand, to be comparable, gross margin expanded by 70 basis points to 22.9% and 120 basis points to 22.1%, attributable to the stronger advertising support for category promotions, higher business advancement support for new stores, and increased revenues from new product listings. The gains in gross margins trickled down to EBITDA margins, with the like-for-like up by 30 basis points to 8.6% in 4Q and 50 basis points to 8.8% in 2021. We have ended the year with 145 Robinsons Supermarket, 80 Robinsons Easy Mart, 34 the Marketplace, 16 Shopwise, and 11 no brand, for a total of 286 stores. Here's Tin for the drugstore segment.
Net sales of the drugstore segment increased by 27.5% in fourth quarter to 6.9 billion, with full year sales reaching 26.7 billion, up by 39.9%. E-commerce sales grew to 4.4% of sales, ahead of the 4.1% target. We expect to hit 6.9% e-com contribution to total sales in 2022. Same-store sales of South Star Drug grew by 4% in fourth quarter from stronger demand for anti-diabetes, respiratory, and cardiovascular pharma products. Demand for fever and flu medicines remained high as customers anticipated a surge in COVID cases after the holiday season. The strong performance in the last 3 quarters negated the 18.7% decline in first quarter, resulting to a flattish same-store sales growth for the year. Blended gross margins increased by 240 bips in fourth quarter to 19.2% and 50 bips to 19.5% versus full year 2020, lifted by the continued alignment of trading terms and vendor support. EBITDA margin advanced by 300 bips to 10.1% in fourth quarter, with notable gains from Rose Pharmacy. On a standalone basis, Rose Pharmacy EBITDA margin climbed by 400 bips to 7.1%, but still lower than the 9% of South Star. Meanwhile, year-to-date EBITDA margin declined by 40 bips to 8.9% given the full year impact of Rose Pharmacy versus only 2 months in 2020. As of end December, there are 582 South Star drugstores, 317 Rose pharmacies, and 2,030 EGP stores. Now I turn you back again to Gina. Leia. Sorry.
The DIY segment posted net sales of 3.2 billion in fourth quarter, lower by 12.5%. Full year net sales increased by 1.3% to 11.5 billion, supported by the e-commerce sales, which grew 2.5 times, contributing to 3.7% of sales, surpassing the 2.5% target. Our goal for 2022 is increase the e-com sales contribution further to 5.2% of total DIY sales. Although 4Q SSSG was still weak at negative 8.1%, this was an improvement from negative 10.6% in 3Q, with year-to-date SSSG at 1.3%. The 4Q SSSG was lifted by the strong performance of the small appliances category, which registered positive double-digit SSSG. Gross margins increased by 30 bips to 29.4% in 4Q due to intentional lifting of discounts during October and November. Meanwhile, full-year gross margins was down by 90 bips to 31.6% due to more promotional events this year. Softer sales and higher OPEX compressed EBITDA margins to 12.3% for the full year 2021. Our DIY portfolio totaled 227 stores, comprising of 180 handyman do-it-best, 31 True Value, and 16 Robinsons builders. For the department store segment, Robinsons Department Store has shown strong performance in 4Q with net sales growth of 24.3% to 4.2 billion, bringing full year net sales to 9.3 billion, up by 10.4% year-on-year. Total e-commerce sales accounted for 1.4% of sales beyond the 1% target. E-commerce contribution to sales is expected to triple to 3.9% in 2022. 4Q SSSG surged to 21.3%, lifting year-end SSSG to 8.7%. The improvement in SSSG is mainly driven by the increase in mall foot traffic due to easing of restrictions during the holiday season. Apparels, toys, and home showed double-digit growth versus 2022. Gross margin jumped by 200 bips to 29.3% in 4Q due to better category mix, reversing the decline seen in the first 9 months, with full year gross margins up by 40 bips to 29.9%. OPEX has also declined by 13.7% and 3.4% in 4Q and full year, respectively, from our cost-cutting measures. As a result, EBITDA margins accelerated by 890 bips to 14.2% for 4Q and 320 bips to 6.5% for full year 2021. We opened 2 stores in the last quarter, one in Antique and another in Tacloban, ending the year with a total of 52 stores. For the convenience store segment, net sales declined by 4.3% to 1.3 billion due to lower number of convenience stores. Full-year net sales amounted to 4.9 billion. E-commerce sales rose to 2.7% of sales from 0.9% in 2022. SSSG further increased to 4.6% in 4Q from 3.3% in 3Q, narrowing the full-year SSSG to negative 9.6%. Sales from commercial areas, where 54% of our stores are located, are showing signs of recovery with mid to high digit SSSG for the quarter. Gross margin and royalty income expanded to 35.4% in 2021, driven by the increase in commission income and DC allowance. Commissions from value-added services such as telco, bills payment, and cash-ins are gaining traction, accounting for 1.5% of sales from 0.9% in 2020. EBITDA margin declined by 70 bps to 5.9% in 2021 as OPEX grew with the conversion of several franchise stores to direct. The specialty segment recorded net sales of 4.2 billion, up 2.2% as most formats registered strong sales for the last quarter of the year. Full-year sales declined by 7.4% to 12.3 billion due to the closure of the fashion segment and the reclassification of grocery and no brand to the supermarket segment. Meanwhile, e-commerce sales grew 63% and accounted for 3% of sales, ahead of the 2.6% target. We aim to increase e-commerce contribution of the specialty segment to 4.3% in 2022. 4Q SSSG climbed to 15.6%, with double-digit SSSG coming from most formats. Year-to-date SSSG was at 6%. Blended gross margin rose by 380 bps to 23.7% in 4Q and 400 bps to 24.6%, mainly driven by the better sales mix from the appliance business. This translated to EBITDA margin expansion by 50 bps to 6.9% and 130 bps to 7.8% in 4Q and full year respectively. The specialty segment has a total of 288 stores by end of 2021. Moving on to our working capital, Robinsons Retail cash conversion cycle was at 6.5 days as we built up our inventory as we opened more stores in 2021 versus 2020, and to hedge against the global supply chain issue, forward buying for higher margins. For our CapEx, the group spent 2.4 billion in capital expenditure for 2021. We opened 135 stores in 2021 versus 65 stores in 2020, thus the higher spending. We now turn you over back to Ms. Gina Dipaling.
For the share buyback update, on February 11, the board has approved the additional 1 billion peso share buyback program. We now have a total of 5 billion for our share buyback program. We have purchased a total of 78,354,250 RRHI shares at an average price of 56 pesos and 30 centavos, with a total amount of shares repurchased at 4.4 billion as of the end of February. We acquired the remaining 40% stake of Ministop from Ministop Japan for 200 million pesos, increasing our share from 60% to 100%. Ministop Japan also sold its South Korean subsidiary to Lotte Group of Korea as part of Ministop Japan's corporate direction to focus on its home market. Rose Pharmacy will acquire 10 stores of Ultramart with a total square meters of 1,487 Ultramart is a mini-mart pharmacy format located in Cebu. The deal is expected to finalize by second quarter of this year. We will convert these stores to Rose Pharmacy to add to our existing 321 stores, Rose Pharmacy stores as of today. Starting January 26, RRHI has become part of Bloomberg's 2022 Gender Equality Index, which consolidates data on women inclusion, leadership, and customer engagement among companies. We are one of only 4 Philippine companies that are included in the index, and the other one is our affiliate Robinsons Land. The 2022 index is based on 2020 data, which was submitted last year. We are starting with a score of 64.87. We plan to continue disclosing our data to Bloomberg GII and further improve on our score, particularly in pro-women branding, where we score the lowest at 20. The Ateneo Center for Educational Development, or ASED, and Robinsons Supermarket Corporation partnership has been going very well and has actually led to the program's expansion. Our total in-kind and gift certificate donations to ASED for 2021 reached 1.5 million pesos. At present, the program focuses on the first 1,000 days of life and has 231 beneficiaries in 5 communities in Quezon City. On November 19, 2021, Robinsons Supermarket won 2 awards during the Golden Grab Awards. Ultimate Lifesaver, where we became the go-to Grab Mart merchant for all grocery essentials. And Campaign King for repeated exceptional sales from fully funded Grab campaigns. Robinsons Supermarket was also nominated for Menu Maven category for well-curated options on the Grab app. The Department of Trade and Industry recognized our pro-consumer efforts as we ended 2021 with a total of 105 Gold Bagwis awardees across our banners, Robinsons Supermarket, Robinsons DC Mart, The Marketplace, and Shopwise. The DTI Bagwis program gives due recognition to establishments in the Philippines that uphold the rights of consumers with the following factors taken into account: compliance to fair trade laws, customer relations, store management operations, social commitment and responsible business sector, compliance to ISO 9001 quality management system standards. Grocery, where RRHI is invested, is currently conducting its Series C fundraise, which will be used to support its expansion throughout the Philippines and to strengthen its financial services capabilities. KKR is leading the round with a $45 million investment. RRHI, through New Day Ventures, will also participate in a subsequent tranche of this Series C. Grocery sources products from Robinsons Supermarket. Sales accounted for 3.7% of total supermarket sales in 2021. Our 2022 guidance are as follows: net store additions of 140 to 150 stores, organic capex of 4 to 6 billion, SSSG target of 5 to 10%, gross margin guidance of 20 to 30 bps improvement, e-commerce target of 5 to 7% of total sales. At this point, we will now open for Q&As. We are now open for questions and answers.
Thank you for your presentation, Ms. Gina. Okay, so we are now accepting questions. You can type in your chat box if you have any questions. In the meantime, I will be reading some advanced questions from the audience. Number one, we got a lot of questions about mini stop. a lot of your investors are very excited about the acquisition of the convenience store segment, the full acquisition. So there are several questions regarding your plans for mini stop. What are your plans after acquiring 100%? And will you continue to operate under the mini stop brand?
We will continue to, operating the business. We now have full autonomy, so we can do, it will be much easier to operate the business without, consulting our partner, Japanese partner. We will use the Ministop brand until end of this year, and now we will be, we're going to rebrand the business. We are actually accepting suggestions on the naming. So for Ministop, actually, we will focus on improving the top line, and also we will focus on increasing the share of the ready-to-eat. Right now, ready-to-eat accounts for like a third of the sales of Ministop. Our plan is to increase the contribution of the ready-to-eat to 40% this year, and eventually to 50% over the next 2 to 3 years.
Okay, thank you. Somebody asked about targeted capital expenditures. I believe you already gave us the figure for 2022. But can you give us guidance on your capex at least until mga 2026?
Capex will be around 4 to 7 billion every year for the next 3 to 5 years. It will only increase once we do acquisitions, offline acquisitions. Like in 2020 when we acquired Rose Pharmacy, like we paid 4.5 billion to acquire the business.
Okay, thank you. So aside from we got several advanced questions as well and live questions. How do you see the impact of the war in Europe, the resulting rise in oil prices and inflation? What's the impact you see on your business?
Well, we expect inflation rate to increase, prices of goods to increase with the rise in oil prices. Right now, we're not seeing yet effect on our business. However, for increasing prices, we usually pass it on to our consumers. If the purchasing power will decline, then that will affect sales. But for now, we're not seeing it yet.
Okay. Some questions on the overall business. SSSGs in some categories were negative in 2021, as I understand, because 2020 was a high base comparable. Do you think it will trend better this year? How do you see the trend so far for SSSG, and what's your outlook for the rest of 2022?
Year to date, for the first 2 months of this year, we're positive same-store sales growth.
Okay, so would you say that your foot traffic is back to pre-pandemic levels?
No, foot
Not
traffic,
yet.
yeah, still below pre-pandemic level.
Okay, thank you. What else? I'm just browsing through the questions. There's a live question here. How will the national election campaign contribute to your sales, to our RRHI sales? Historically, does that have an effect from previous?
Historically, yes, there's an effect for every national election, more so when there are more candidates running for the highest position. We estimate that the election boost will be equivalent to 1 week worth of sales.
Okay.
Blended.
Sorry.
That's blended for total.
Okay, okay. Okay. Just looking through the questions. There are several questions coming in live. Okay, some questions about e-commerce. Somebody asked, why is there a strong emphasis on e-commerce? Do you intend to continue to push for e-commerce, especially now that we have seen the worst of COVID-19 and we are possibly going back to, actual shopping, not e-commerce? Do you plan to continue the e-commerce emphasis?
Yes, we definitely plan to grow our e-commerce business. No, we think that the pandemic really just hastened our plans for e-commerce. But now that more people are more comfortable buying things online, we believe that they will continue to do so. So we're really preparing for a more omni-channel experience as people get more used to e-commerce. No, it will blur the lines between online and offline. In fact, we have started with some initiatives like click and collect, and even subscription. So, and definitely, yeah, like in the case of GoRobinsons, we just started last June 2020 in the middle of the first few lockdowns to initially to deliver groceries, but now we have expanded to other formats. We now have 11 formats, and we expect to end the year with 16. So there's still a lot of growth opportunities in terms of formats, in the number of stores, because we're not yet in Visayas and Mindanao. Oh, we just started in Cebu this month. And also in terms of assortment, all of our BUs are just starting to build up also their assortment on the platform. So definitely, we still expect to grow e-commerce.
Okay, so I believe it was mentioned that you were aiming to achieve 5 to 7% growth on e-commerce. And you
Yes.
mentioned that you
Yes.
just started in Vismin.
Share actually.
That's a 5 to 7% sales contribution.
Yeah.
Sales contribution. Okay, so would you say that you're aiming to get that growth from your expansion in Vismin?
Oh, yes, definitely.
Absolutely.
Absolutely. For example, we have yet to onboard the likes of mini stop. We're in the process of also, we just onboarded appliances. That's actually our 12th business unit. We still have Daiso, Pet Lovers, Mini Stop, and Super 50 for the balance of the year. And as I mentioned, we just started in Cebu. We are now at 115 stores. We expect to double that by the end of the year.
So just a follow-up question again on e-commerce. This is a live question. Is it possible that both e-commerce and traditional stores will grow at the same time? Don't you think one segment will cannibalize the other?
We think it's it's additive.
Yep.
You know, it's not gonna cannibalize each other. And we feel like if we are better at implementing an omni-channel experience for customers, we acquire new customers from other players, whether these customers are more used to pure play e-commerce or they're with our traditional competitors. The stronger we are with omni-channel, we believe we will grow our customer base.
Okay, thank you. All right. Some questions here on supermarkets. In the past, margins improved when RRHI acquired Rustan Supercenters. Do you think there's still scope for margins to expand moving forward? Are you premiumizing some of your product offerings and or increasing private label brands?
Hi, Christian. Stanley here of the supermarket segment.
Hi, Stanley.
Yeah, absolutely. We are still expecting an additional spread in our gross margin. What with the strategy to reinvent Shopwise, turn it into an aspirational store. So by doing so, it goes without saying that we are working on adding a lot more imported merchandise, bigger packs in that store. No? And second is the marketplace. Our aim is also to raise the penetration of indent products up to 60%. We all know that we get better margins from indent as compared to the locally sourced merchandise. But then again, for locally sourced merchandise, we're seeing that the local vendors have recently been quite aggressive in terms of introducing new items, and we gain a lot of product listing fees from those from the new product intros. So all in all, yes, we are expecting a lift in our gross margin.
Okay, thank you, Stanley. On a more personal note, I passed by Shopwise Pasong Tamo yesterday. I used to live nearby and I saw the vast improvement in the store. It was really great. I haven't seen it in like 2 years. So it's a marked improvement.
Thank you.
Just wanted to compliment you on that.
Thank you. That store is we're expecting to finish the renovation of that store by around mid-May this year.
Yes, it's very premium now. I remember how it used to look like before you acquired it.
It's a complete turnaround.
Good. Okay, some question on the breakdown of the new store openings per segment. Do you have that?
Yes. For supermarket, we're looking at 40 to 50 new stores. Drugstores, we're looking at 80 to 90. DIY around 10 to 15, and then specialty 20 to 30 stores.
Okay. Do we have a general idea of the areas you're targeting for the new store openings?
Well, we do IRR computation for every new store that we plan to open. So we open where we can make money.
All right. Okay.
Yeah.
Looking back on 2021, what percentage of the sales growth is attributable to new stores?
Very small.
Very small.
For us, very small.
Yeah, it's small because we only opened few stores in 2020.
Okay. Uh-huh. A live question here. What is your expected year for retail sales to go back to pre-pandemic levels? Do you expect it this year or next year or maybe further down the line?
It depends on the format.
The banner.
Yeah, it depends on the banner. Some banners, we expect it to hit this year. I mean, they will reach their pre-pandemic sales this year. By second half of this year, the others will be 2023.
Can you maybe shed some light on what segments are those particularly that you expect to recover by this year?
Actually, supermarket and drugstores are already at 2019 level, the pre-pandemic sales. For this year, different formats. What I can recall is that for 2023, we're looking at department stores going back to 2019 level.
Okay. So you expect the department store to recover at a later date aside from the other segments? Okay.
The reason being, just to add, the reason being it's because a significant portion of sales for department stores actually are coming from, school. They sell school accessories, school uniforms, and if there are no school, if kids are still doing homeschooling, then that market is out for this year. No sales.
Okay. Another question. Just going back to e-commerce very quick. How would you compare the margins of e-commerce compared to actual store margins, to physical store margins?
It's the same because we don't maintain our own inventory. We're actually a channel for distribution. It's the same.
It's roughly the same.
Just to add, it's probably better, right? Because it's an incremental sales. We consider it incremental sales. So the rent is already in place, it's being paid by offline, and then the cashiers is already paid by offline. So meaning whatever sales we have from online is going direct to the bottom line, EBIT twice, probably higher.
Okay, thank you. Another question, can you maybe elaborate further on the investment of RRHI in grocery? Can we maybe have a better idea of what's it about?
So grocery is a B2B business. We are the one providing the goods that grocery sells to the sari-sari stores. It's Robinsons Supermarket. Sources the products that are being sold to sari-sari stores or grocery. So we're invested in that business around 14%. The value of that business now, I mean, based on our original investment, is probably, the recent round is like 3x higher than the valuation of the Series B funding. And Series B funding was like 3x of the Series A funding valuation.
Sorry, I accidentally muted myself. Okay, somebody's asking, do you have any planned dividend payout, or will there be special dividends coming this year?
Last year, we did pay a special cash dividends of around 1 peso per share on top of the regular cash dividend of 83 centavos per share. If there are no major acquisitions and usage of cash, then the high dividend payout rate might be sustained this year.
Okay. There's a member of the audience who's concerned, is the share buyback taking away from the ability of RRHI to increase the dividend payout? Or is it a different thing? Is it separate from each other?
RRHI has a net cash position of around 26 billion, where our share buyback is only 5 billion. CapEx is only 4 to 6 billion.
Okay. So in other words, you have enough money for both. That's good. That's good. Okay. What's another live question? What is the average cost of stores per division? Is there like a division that has a higher cost per store?
It's more like average CapEx per square meter. Yeah.
Okay,
So,
thank you.
the higher average CapEx per square meter will be the small stores, because the whole CapEx will be spread out in a smaller space.
And the supermarket, because we have to pay for refrigeration equipment.
All right, that makes sense.
Very expensive.
Okay. Okay. Live question. Just checking the questions here. Sorry, hang on. Is RRHI still planning to acquire more drugstores, specifically in the Vismin region? Or are we looking at further expansion for drugstores?
Yes, as mentioned, organically, we're planning to open 80 to 90 stores this year, and the rate of expansion will be increasing or the same in the succeeding years. On top of that, we're also looking at potential companies to acquire. In the Philippines, there are 14 to 16,000 independent drugstores, total drugstore. The chain drugstores will probably be around half of that. So there's still like half that potentially can be consolidated.
Okay, thank you. There's a live question here. What are the growth drivers for each division? Do we have data on that?
growth drivers for each division segment. Well, on supermarket, I think it's more like increasing purchasing power, big packs, promotions, premiumization. For drugstores, the higher
For drugstores, it's actually the specialized medicines like the onco, the kidney transplant medicines that we will be adding in our assortment.
Okay. Speaking of drugstores and growth drivers, it was mentioned in the previous earnings call that Rose Pharmacy has a lot of private label brands that carry higher margins against the other merchandise. And that South Star Drug will also be doing that same thing. They have a own private label brand. Is this something that you think will help improve the drugstore's margins moving forward?
Definitely no. When we acquired Rose Pharmacy, it opened actually us carrying the Guardian brand, Guardian products, no. And at the same time, we are also looking at creating a house brand for the drugstore segment, just for non-pharma. So yes.
Okay. All right. Another live question. How's the market share of your drugstore business? Are you making a dent on, I would rather not mention the brand, but the leading drugstore, the big one.
So combining the three drugstores, no, we think we are already at number 3. 3 or depends actually on the supplier. If you look at the pharma itself, we're actually number 2 on some suppliers, on pharma suppliers.
Okay, thank you. All right, just waiting for more questions. And just to remind everyone, we have allocated an hour for this earnings call, so we have around 10 minutes. If you have more questions, please type it in the chat box. On membership cards, how many members does Robinsons Rewards cards have now? And by how much did it increase during the pandemic?
Combining the members of SEBGO, that is a total of 5 million members.
5 million.
Yes.
Okay. Of your total revenues, how much do you estimate the membership purchases? Did it contribute significantly to the total?
It's 60% for the supermarket.
Actually, around 50% total.
Sorry?
Around 50% across all formats. The blended. It's already blended.
Oh, okay, 50%. All right.
162.
Okay, another follow-up question on the convenience stores. It was mentioned that the convenience stores will focus on trying to grow ready-to-eat's contribution to sales because of the higher margins. What is the category's percentage contribution to the total now, and what is your target contribution?
Sorry, for the ready-to-eat?
Yes, ready-to-eat sa convenience stores.
I think as of December, we're tracking 37% already contribution.
37.
Ready to eat. So the target is 40% this year.
Okay, thank you. Question on DIY. Why did the revenues of DIY weaken year-on-year in Q4 versus Q4 of 2020?
We had some supply chain issue for DIY in Q4, but it has already been corrected.
All right, so it was a one-time thing in Q4.
Yeah.
All right, thank you. How much is the number of stores that you are planning to build until 2026? New stores, I guess. The question is new stores up until 2026.
Based on our 5-year plan, I think we plan to double the number of stores by then. Meaning
Double.
we have to, no, I mean total.
I understand it's a kind of a long time frame, 2026.
I know. We have to get past 2022.
We have to get past this year first. Speaking of new stores, how many mini stop stores are you planning to open this year? Will it be more organic or more on franchises?
Actually, mini stop is one of those formats that were, that was, you could consider a challenge by the pandemic. Mainly because around 55% of our stores are located in the central business districts and near schools. I mean, it's around 60% if you include stores near schools. With offices, operating at 20-30% only and the schools closed, then their sales have really declined and profitability suffered. With that, our goal for this year, our focus is really just to preserve our balance sheet, and we will only start expanding once we see profitability will turn around to positive. Earnings will turn to positive.
Okay, thank you. I think most of the questions that are being thrown here have been answered in the presentation, but can we maybe recall the average cost of stocks bought back so far? Was it 56.30? I think you mentioned earlier.
That's correct.
Okay, for the benefit of the person who's asking that question. Oh, here, sorry, I missed one. What is the debt levels of RRHI and how much is the cost of debt? What's your ratio of long-term and short-term?
It's mostly short-term, but we're on net cash position. Our debt is around 5 billion, right? More or less. Yeah, and then so around 5 billion. Our cash is like 20+ billion.
Okay, very, very cash-rich company. This is another question. What is the strong points of RRHI to fight against inflation compared to other retail companies?
Sorry, your question again?
What are the strong points of RRHI to fight against inflation compared to other retail companies?
To fight against inflation. Actually, we follow the suggested retail price of the vendors. Yeah, we just follow. So pretty much will be the same with the other retailers.
Actually, retain the margin.
Yeah, our target is just to keep or sustain our margins, gross margin.
Okay. Another question. Ito medyo market related. Do you think the removal of RRHI from the index would affect the company?
I think the reason for the removal of RHI in the PCOM index is largely because of the market cap. The market cap declined because 1/3 of our business is hit by the pandemic, the discretionary formats, because they cannot operate during lockdowns, hard lockdowns. They're not allowed to open. Once I think sales will start returning to pre-pandemic levels, then we should see, hopefully our market cap go back to, over 100 billion pesos.
Okay, that's something we look forward to.
Yes. And what's a good thing about it's not a good thing. But what during the last 2 years, we implemented austerity measures, cost cutting measures. So we're actually coming from a low base. We're just waiting for the top line to improve. So whatever improvement in top line, most of that should cascade to EBIT and bottom line.
Okay, I understand. Uh-huh. Okay, due to the share buyback program, your treasury shares have increased. What's your plan for the treasury shares? Do you plan to sell it back via follow-on offer or private placement? Do we have any plans for that?
No immediate plans yet.
Okay. All right. Okay, we have maybe 3 minutes left. Last call for questions, I guess. Okay, there's a quick question about department stores. With all the competition that is out there, do you believe that department stores are still relevant today? In other countries, department stores are being rationalized.
I think it's still relevant today, especially the stores located outside Metro Manila. I mean, where can, if you go to the mall, where can you buy underwears, for example, except in the department stores? I mean, if you go to a mall outside of Metro Manila, and there's limited specialty stores outside of Metro Manila. So it's still a go-to store for buying home goods, children's wear and accessories, apparel. So yeah, for us, it's still a viable business. In fact, the 3 stores we opened last year in Tacloban, Antique, and what's the other one?
La Union.
They're actually doing very well and generating sales of above the break-even level. And yeah, supposedly these stores, usually takes 3 years to mature in terms of sales, but they already hit the sales of a mature store in just like operating less than 3 months.
Okay. Well, I understand as someone who came from the province. I know that, the department store is a very important place in the province.
Yeah.
Gosh, everybody's so excited about Mini Stop. We have another question about Mini Stop. Do you forecast Mini Stop grabbing more market share? If yes, how do you plan to do this?
I think our plan is just to increase our ready to eat. Offer you should try it. Crispy pata, Uncle John's fried chicken. Now we'll be launching lechon kawali. So all the Filipino food that you like.
I'm very excited about the lechon kawali. I love your fried chicken though.
Oh, they're really very good.
See, somebody agrees with me in the chat. My favorite is Uncle John's chicken, the best. I agree. All right, I think people are starting to talk about fried chicken and running out of questions. See, another person agrees, the best. Okay, so I guess with the talk of Uncle John's fried chicken, we might as well end it here. We've been here for an hour. To everybody, I would like to remind you that we have an earnings call with Bloomberry next week. That's on Tuesday, same time. We hope you will join us also. The link is in the chat if you want to register. And again, thank you so much to RRHI, Robinsons Retail. Guys, thank you very much. It's been such a pleasure. Thank you for taking time to share with us your 2021 earnings.
Thank you.
Okay, and a lot of people are thanking you as well in the chat. So thank you, and we look forward to maybe next year. Can we do this again next year? Okay, thank you.